I'm Helen Morgan and I'm a tax manager at ACM. We're almost at the time of year where we start to think about Christmas. This video will give you an insight into the rules around Christmas parties and Christmas gifts and what is taxable. Christmas gifts can be provided to employees tax-free under the trivial benefit rules. Perhaps you're thinking of giving your employees Christmas gifts such as hampers, turkeys, a bottle of wine, a box of chocolates, or other times of the year small token gifts such as a bunch of flowers to celebrate a birthday. These type of gifts would be exempt from tax and national insurance for both employees and employers as long as the following conditions are met. The cost of the gift, including VAT, is under £50 per employee. The gift is not cash or a cash voucher. A cash voucher is a voucher that can be exchanged for cash, so a voucher that can be used in a high street store would be fine. The gift isn't in the terms of the contract and it isn't a reward for the work or performance. There's no limit on the number of gifts in a tax year for employees, although they must not form a regular pattern, otherwise they would be grouped together. However, there is a cap of £300 per tax year on the number of gifts made to directors or office holders, that would be a company secretary, of close companies, which is most family companies. If the value of the gift exceeds £50, the full cost is taxable. This would need to be reported to HMRC on Form P11D, and tax and national insurance would be payable. So what about Christmas parties? There is a separate exemption for annual events. The exemption applies to any social function, not just Christmas parties. To qualify, the event must cost £150 or less per head. It must be held on an annual basis, so a Christmas party or a summer barbecue. All employees are invited. This includes separate parties for separate departments, for example, as long as all employees could attend at least one of the events. The cost includes all of the costs associated with the party, such as transport, food, drinks, accommodation, and including VAT. The total cost of the event would be divided by the total number of people attending, not just employees, so this would include other family members if they attended as well. As with the gifts exemption, if the cost of the party exceeds the limit, then the full cost would be taxable and reportable on Form P11D. If more than one event is held and the total cost per head exceeds £150, only the function that costs less than £150 will be exempt. For example, if your company held two events, a Christmas party and a summer party, and all employees were invited to both, if the Christmas party cost £110 per head and the summer party £50, then this would be more than £150 in total, so only one of those would be covered. It would be more beneficial to cover the Christmas party as that costs the most, leaving the summer party to be taxable. You can use both exemptions together, so a gift to the employee and a Christmas party, but if the gift or the party exceeds the exemptions mentioned, this would create a tax liability for the employee. If the employer doesn't wish to create a tax liability for the employer can enter into a PAYE settlement agreement with HMRC, where the employer agrees to settle the tax and the national insurance on behalf of the employee. More information can be provided about this if required. I hope you found this useful. If you do have any questions or would like any further information, please contact either myself or one of the tax team here at ACM.